Okay. Good evening, everyone. My name's Richard. Can you hear me all loud and clear this evening? Somebody can't hear anything? I can. Yeah. Right, that's great. Thank you very much. This webinar is about reconciling the purchase ledger control account with the individual purchase ledger account. The example I've chosen is probably more challenging than one you're likely to see, but it is a good indication of what to expect and how to address the questions, because they do cause problems, these. Right. First of all, we'll start with the purchase ledger control account. It's the purchase ledger control account for Specialised Limited, and we'll just run through the breakdown of it first, just to make sure you're all familiar with the layout. We start at the 1st of May with a balance brought down of 71,069, brought down on the credit side, because bear in mind the purchase ledger control account is where we record the total of all the amounts we owe our suppliers. Starting now from on the debit side, purchase returns. If we return goods to our suppliers, then it reduces the amount we owe, so they appear on the debit side. Again, payments from the cash book that we've made to suppliers reduce the amount that we owe our suppliers. And then back to the credit side again, the total of all the postings from the purchases day book, 421,654, they're all the entries that we'd normally expect to see in the purchase ledger control account. We balance it off. The credit side will be the highest, and it equals 492,723. That's the total we put on the debit side, and the balancing figure, the balance carried down, is the actual balance on the account. Just bear in mind that the balance on that account is the 97,973. Quite often students will take the total figure, that is the 492,723, as being the balance, and that's not correct. So the balance on that account, balance carried down, is 97,973. When that goes into the next accounting period, obviously that'll come down on the credit side to reflect that that is the total amount we owe our suppliers. Right, moving on. The balances below are all the individual suppliers. There's not many in this example, obviously, to keep it simple. So the total of all those suppliers' individual accounts totals 98,412. Now, as you can see, that is not the same as the balance carried down of 97,973. So somewhere we've got an error of £439. That is what makes these tricky, because we're then given a list of errors that have occurred during that accounting period, and we need to treat each one of those in terms of whether they relate to the purchase ledger control account, one or more of the purchase ledger accounts, or both. So we're going to work our way through each of those, and at the end of each of the errors, we're just going to have a poll before we start talking about it, to see who thinks that it affects the purchase ledger accounts or the purchase ledger control. So the object of the exercise this evening, we're going to prepare a corrected purchase ledger control account, starting with the closing balance on the original purchase ledger control account. Then we're going to reconcile all those individual balances so that the total on there agrees to the total on the control account. Right, so going back to the original errors, the purchases day book was undercast by £1,000. Who thinks that that will affect the purchase ledger control account, or the purchase ledger account, or neither of them for whatever reason? So just feel free to click away, yes, no, or neither, and we'll see. Interesting. We all voted. Right, well, that is interesting. If you think about the purchase day book, if it was undercast by £1,000, that means when we posted the purchase day book, what's it was, James? When we posted the purchases day book, the total that we posted into the control account is going to be undercast by 1,000. But what happens when you post the purchases day book to the individual purchase ledger accounts? In effect, that's not going to have any effect on those, is it? Because we take the purchases day book line by line and post those into the subsidiary ledgers. So it's only going to affect the purchase ledger control account. Is everybody happy with that explanation? Any queries? Excellent. Right, so that one just affects the purchase ledger control account. Right, let's have a look at the second one now. The analysis column for the purchases ledger control in the cash payments book was overcast by £500. Now, let's have another poll and then we'll have a brief talk about whether it does or not. So again, get voting away. No rush, take your time to think about it. Just think about what we're saying. It's the analysis column of the purchases ledger control in the cash payments books. That's payments we've made to our supplier. Will that affect the subsidiary ledger accounts or the control account? 6, 10, a few more to go. Got the wording wrong. Okay, right. Who thinks it's going to affect just the purchase ledger control account? It's not a poll, no. Just type your answers quickly. No. Right, let's talk our way through this one. Again, this won't affect the subsidiary purchase ledger accounts, as the analysis column in the cash book only records the totals that we've paid to the suppliers. And given that payments to suppliers are a debit entry to the purchase ledger control account, we'll need to credit that as well. So that doesn't affect the individual subsidiary ledger accounts. Again, does that make sense? It does hurt your brain, Holly. That's what makes this such a tricky subject. You need to really be clear in your mind exactly what it is we're dealing with here. If we're looking at the payments to suppliers from the cash book, and that amount has been overcast by £500, when we've posted that to the control account, it will make a difference, but the individual subsidiary ledgers won't be affected. All okay with that one? Should we move on? Jeff's answering those, isn't he? Right. Error C. A contra entry of 482 has been entered in both the subsidiary sales ledger and purchases ledger, but no entry has yet been made in the general ledger account. Are we all happy with what a contra entry is? Yes. Right, so just briefly, for those that are possibly not, if we're selling to and buying goods from the same company, rather than make a payment and receive a payment from that company, we would just contra an amount between the two. it's not really that practical in the real world because it gets ever so messy, and it doesn't leave such a clear audit trail. So it's more of an academic exercise than one that you'd see in the real world. But right, let's have another little poll. Who thinks this will affect the control account or the individual subsidiary ledgers? Nearly there. Finish it with that thing. It is something of a trick question, this, because it tells us that it's already been made in the sales ledger and purchase ledger. So we can be certain that there is nothing to make in terms of an adjustment to the purchases ledger. That is in effect the tricky part, because if you imagine if you contract an entry for £1,000, that wouldn't necessarily correspond with exact sales and purchase invoices. So it would become very messy because it would pay some off in total, but then leave one and possibly a credit note that were part paid. So the messy part of it has been done. So in this one, the entry does just need making in the control account. Right, moving on. Error D, in extracting the balance at the 31st of May on the purchases ledger account of Cavendish Limited, an invoice for £579 has been omitted from the account. It had been properly included in the purchases day book for the month. So back to the poll. Who thinks this is going to affect the purchase ledger control or the purchase ledger? Broadcast results, do you think? Right. Let's have a think about this one again. If the error has only been made in extracting the balances, that is to say, if it's been recorded correctly in the purchases day book, then the posting into the purchase ledger control will have been made correctly. So with this one, it's different to the first two in that it doesn't affect the control account, but it will affect the individual balance of Cavendish Limited. Does that make sense to everybody? Any queries? Fire them away at Jeff. He's very nimble-fingered. Yes. Right, ready to move on. Right. Let's now have a look at the conclusion, if you like. We've discussed all the errors. If you've not made a note of them, it doesn't matter because I have. And we'll just pop these into the control accounts and the list of balances and see how it works out. I've done it like this because it just makes it a little bit easier. The first entry in here is the original balance carried down of 97,973. So I'll just skip you back to the original screen. So on the left-hand side there, the balance carried down is 97,973, which becomes the balance brought down in our amended control account. So that's a starting point. That's what the original balance was calculated at. So if we now go through the adjustments to the errors that were made, we've got the contra entry that appears as a debit on the purchase ledger control account, because what we're saying is that company that we made the contra entry with, we both bought from and sold to. So in our sales ledger control account, we would credit the control account to show that the amount owed by our customers had reduced, and we would debit the purchase ledger control account. So that was the missing entry there, which is now input onto the debit side. The other one was the purchase day book that was undercast by £1,000. Again, think about the logic here. When we post the purchases day book, it appears as a credit to the purchase ledger control account. What we're saying is we've bought more goods from suppliers, so we need to increase the amount we owe our suppliers. So the undercast goes on the credit side. The second one is a little bit confusing here, because what we're saying there was the cash book was overcast. So think about the logic. If the cash book entry was overcast, it means that we overstated the amount we paid our suppliers. Well, when we pay suppliers, the bank payment appears on the debit side of the purchase ledger control account to show that the overall total has reduced. So if it was overcast, we make the correcting entry on the credit side. If we now balance the account off, clearly the most entries are on the credit side. The total comes to 99,473. So that's the figure we pop into the debit side. Leaves us there now with an adjusted balance carried down of 98,991. Everybody happy with that so far? That reflects the errors that we discussed in the first part of the webinar. Good. Right, moving on. If we now pop these balances into the list of purchase ledger accounts, they're all the same with the exception of Cavendish Limited, where the original 9,047 needs that missing purchase invoice of 579 adding on, which gives us a balance of 98,991, as is the balance carried down, the adjusted balance carried down on the purchase ledger control account. So we've now reconciled the two. Just remember that those adjustments could have been posted straight into the original account, but it would just have made it look messy. All I've done here is to take the original balance brought down, referred to that as the draft, and then made the necessary adjustments in the control account and the one entry to Cavendish Limited. Is everybody happy with that? Does that make sense? Oh, Natalie is so confused. What's confusing you, Natalie? Right, any questions? Fire away. Jeff is there busily waiting to reply. Yeah.